Good afternoon, and it's a pleasure to have my fellow panelists, many good friends, familiar friends here. We have a pleasure of having Priscilla Adams, Group Compliance Director of Bullish, traveling all the way from Hong Kong. Thank you for joining us. We also have Vidas Maha Al-Saadi, Head of Regulatory Affairs, Qatar Financial Center, traveling from Qatar. We have very diverse, I think, backgrounds of people and country representatives. We have Stephen Phillips, Senior Advisor to the Regulatory and Industry Experts, traveling, if I may, from Riyadh all the way. And we have with us, national, Swiss-based, traveling from Zurich, Gino Wurthenson, Chief Legal and Compliance Officer at Laser Digital. Thank you for joining us. Today we are going very straight forward to the setting the scene and talking about vulnerability but opportunities that is raised in the DeFi scene. So I would like to open the floor for my fellow panelists and the experts in the room. During the last year, what type of trends you have been observing in the DeFi in terms of opportunities that the DeFi has brought to this ecosystem, but also the risks that you have been foreseeing? If I'm looking at you, Priscilla, we always look eye to eye, and most of the times in the panels, I know Bullish has involved as institutional players versus the retail and consumer base. What's been your experience?
Sure. So for those of you who don't know Bullish, well, we also have a regulated exchange. We also we have an OTC desk. We also have a crypto private fund as well. And what I see also through like the OTC trading is if you compare where we were in 2023, when there was a lot of buzz and a lot of money flowing into like digitized or tokenized treasuries, a lot of that was because there was zero yield that you could get anywhere else. So 4%, 5% was looking pretty good. Now what's happened is over 2024, and I think part of what's driving a lot of the flows into DeFi is just the appearance of the staking opportunities, the yield opportunities, right? When you start talking institutions, you're really just talking about money. So where the money flows, where can you make a return? And you're seeing some really crazy numbers, right? So some protocols, which I personally feel like on your point of risk, are just going to blow up at some point because if you see 27% yields, 30% yields or higher, like how much of that is actually sustainable, right? It feels like a bubble, but nothing's blown up yet, so we'll wait and see. And so we have seen then kind of the market, especially going into December of 2024, over like, was it 100 billion? I think it's 100 billion that's flowed into DeFi as total value locked or TVL. And I think that it's really going with this yield. Some of the risks is, of course, you have huge information asymmetry. You don't know the quality of the chains. You don't know if you're going to get anything back. There's a lot of almost counterparty risk. And because we're dealing with DeFi, there may not be a real counterparty. But I'll pause there for others to chime in.
Is there any insight from maybe either of you, Stephen, because you advise the regulators, especially I think also you've been working closely with central banks in the MENA region, Saudi Arabia and Maha, you as well from a regulatory point of view. How would you see maybe the opportunities? Maybe I can give some numbers. I mean, 1 inch for those, you should probably know 1 inch, else you were not here today. But is one of the biggest aggregators in the DeFi scene. And if we look at the numbers, on average per month, we have over 12 billion US value of swaps in terms of volumes. And this is we are not yet talking about institutional players plugging to DeFi, which would be a deal breaker in terms of the market value and the trade volumes, but that also shows that I think the opportunity. This is the future of finance, to my view. Since I joined 1 inch, also I wouldn't have, and I don't talk about centralized exchanges here yet, but we will get to that. But there are also risks in terms of vulnerabilities, right? What type of, from maybe regulatory point of view, both Stephen, Maha, what type of vulnerabilities you perceive also from a retail point of view, consumer protection?
Yeah. So generally, the standard risk we see are like rug pulls, pump and dump schemes, the usual things, Trump coin type stuff. Um, yes, vulnerabilities with the smart contracts as well. There's any number of risk associated. It's generally a high risk place to be because you don't really have a legal entity that you can, approach for liability. So that really presents a problem. So looking at how to address that, it's important that users understand the technology, they understand the risk, and they take steps to protect themselves. So, for instance, is a smart contract that is running the protocol, is that immutable, or can a developer come and change stuff on a whim and extract a lot of money?
And you might not know. It
Exactly.
might be impossible to actually find who's behind it
Exactly.
as well. It's a big black box.
Yeah. So it's constantly evolving as well. So you need to. It's a tough place for consumers to be honest. So this is where companies like 1inch can step in to help and provide these technologies, provide the access in a way that is safer than just doing it yourself. Yeah.
So, from Qatar's point of view, we decided that it's a bit too early to look to regulate and look into DeFi in that sense. So, we're just taking a wait and see approach. We all know that there is no stop button for DeFi. It's global by nature, and we're looking into the different use cases. But let's face it, DeFi as a market is relatively new. The first use case that I can think of dates back to 2016. That's when my son was born, and he's tiny. So basically, it's just so tiny of a market compared to the overall crypto asset sphere, which accounts for only 4% of the overall crypto asset market. So the advice that I'm giving the regulator is do not rush to regulate. We will keep an eye. And also another thing that we don't really talk a lot about is even with traditional finance, till this very day, we're having all sorts of frauds and scams. And sometimes you have to get your finger burned to learn. And consumers are not necessarily all stupid, and they should be able to navigate through traditional finance and DeFi. So from a Qatari point of view, while we are still banning cryptocurrencies and stablecoins, we know that DeFi is open. I would like to turn then to the different use cases that we have in DeFi. We have smart contracts, aggregators, interfaces, and each one of these categories has its own risks associated with it, but also an opportunity because it underlines some of the inefficiencies that we see in the traditional finance sphere, and that's why DeFi came to place. The risk that I see is that while we have smart contracts that are self-executing, we do not have clear standards on auditing these smart contracts. Who's going to do the audit? Who's going to be checking on these open source platforms? And having anyone just put the label DeFi to get out of financial regulations is the biggest risk that I see.
Beautiful. Actually, I like the point that let's not rush regulating DeFi, and I think I was advocating this 2 years ago also at the European Parliament with MEPs sitting. Please, for very obvious reasons, let's wait and observe what type of risks we are foreseeing in the DeFi, and let's first deal with centralized exchanges, and there are the gateway. Gino, for Laser Digital, right? How would be CeFi players, which they play as a gatekeeper and gateway when it comes to plugging into the DeFi environment, and your experience as the Chief Compliance Officer?
So in addition to the risks which we have heard, which are impacting directly the investors and users, as well as sometimes absence of regulations, we also have risks on a more systemic level. There is risks about integrity of financial markets and financial systems. And this does not directly impact a specific investor if on the other side of a trade is a sanctioned person or somebody who wants to launder proceeds from illegal activities. But as a general for the industry, and this is a challenge, right? So, and here is a difference whether you're like a retail investor accessing a pool by yourself. You're not subject to regulations. You're not subject to licensing requirements. You might lose your money to the risks which we have heard about frauds or technical vulnerabilities. But basically, it's your own money, and if you are enough educated, then you should make your own decisions. On the other side, and this is exactly where I'm coming back to your questions, there are people out in the market who have a lot of DeFi experience, can assess the risks and can make educated decisions. But there are also people like myself who can't read code, right? So I cannot assess by myself whether a smart contract at the end of the day is vulnerable or not. So I would need to rely to other people who are better than myself. And these other people, that could be CeFi players who would actually provide a gateway to interested investors and to exactly take opportunity of these yield opportunities, as we have heard before, but conduct some due diligence on one side and pre-select potential DeFi applications on one side. But on the other side, since these CeFi players typically are regulated because they touch other people's money, they also know what it means to be regulated. They have compliance processes in place. They have anti-money laundering frameworks. And this can be expanded into the DeFi space, which is a challenge, especially and for pools where basically everybody can access it, right? Everything which is permissionless, obviously, is also vulnerable to actors who want to benefit from such setups to launder proceeds. And as a regulated institution, utilizing controls like chain analysis and type of controls to mitigate risk, to screen first pools whether they're suitable to give access to their own clients because the exposure is within a defined limit. That helps for overall protection of integrity of markets on one side, but also helps the protection of the specific investors who then can rely that experts have pre-screened these pools and performed due diligence.
Thank you. I think, Priscilla, you want to add something, and I will take it forward to a bit spicy.
You know me, I might make it a bit spicy. So, but to be honest, like, what CeFi exchange would, in today's world, honestly take that risk? Right? There's a huge risk of acting as an intermediary between a customer and a DeFi protocol and smart contract. So I think it's a great idea. I don't know if the industry is really there yet, because even when, like, what I look at from the institutional side, as we're trying to build out due diligence on DeFi protocols, it's this weird thing of using firms like Verichain, right, to look at the smart contracts. Then it's looking at how can you find who's behind a protocol? What's in their like terms and conditions that at least they claim to be doing in terms of AML and sanctions. But going back to the point earlier, you have no way of verifying anything that they say. It could all be window dressing, right? I think some like Aave do it a bit better, where they have like clear partnerships with blockchain analytics firms, so you know that they're doing something to mitigate risks. Most of them, you have no idea. And so I think we're still like multiple steps away from being in a place where CeFi is actively taking on that risk, because the problem becomes the CeFi exchanges, right? So if you get a dirty asset back because your client wanted to interact in DeFi, it's on you. And that's lost money. Just a thought.
Yes.
Maybe to add on that, if it would be that easy, then every CeFi exchange would already do it,
Absolutely,
right?
we'd already be offering it.
Exactly. But here is exactly where first mover can then add value. And yes, this is what also my team takes a lot of time in building frameworks from a compliance side, but also implementing technical controls, utilizing external specialists in the chain analysis space to basically screen pools from outside. And in the ideal world, the protocols would already have embedded controls which you can fully rely on, but we both know that this is not reality, right?
One day.
One day perhaps. And till then, we need to think what we can apply from outside perspective. And then, yes, we cannot give customers access to all the pools out there. That's simply not a risk which anybody can take. But there are still some pools outside where, after proper risk disclosure externally to your client, but also internally, what is the risk appetite of your institution and how do you mitigate these risks where you feel comfortable, that you can open a space in the DeFi world to some of your clients obviously after assessment of the suitability, goes without saying. But this is the first step, and that drives then ultimately mass adoption.
Stefan?
Yes, so perhaps it's also useful to kind of level set and acknowledge that DeFi is kind of a spectrum, right? So for me, as a purist, if you can control the protocol, it's not DeFi. So it kind of like shifts the conversation a bit, because if you have an identifiable person that's in control, is it really DeFi still?
I like now to bring, that's a it was a good opening for my next question, which I think many have heard the news recently. It's been I'm not talking about Trump coin, by the way, but I'm referring to Tornado Cash case, which was a deal breaker when the Tornado Cash as a mixing service got sanctioned by OFAC, and hence the addresses also got sanctioned. It was a deal breaker for the entire community of developers, because they also arrested, indeed. You mentioned if it's controlled, it's not, what are we talking about? The decentralized principles, right? But they also arrested the developer. And that time, at least from my point of view, I was very much against that move from authorities, because they started putting the same regulation over a technology which had consequences for the entire ecosystem. Not that Tornado Cash was used for good cause, but it was a decentralized, operating on decentralized smart contracts, and sanctioning a smart contract had consequences.
Yeah, I agree. But in that scenario, I think the developer was actually benefiting some small amount. So to me, that makes him kind of liable.
To that point, actually, there was an excellent BIS paper. I think it was published back in 2018. The title of that paper is "Decentralization is Just an Illusion." We can argue with that. But within that paper, the BIS is just claiming that we're replacing centralized intermediaries with virtual intermediaries. And in a lot of cases, you would always be able to see a sense of concentration into a particular party. I think in the Tornado Cash, I agree. I do not think that the developers should have been arrested, but there should always be some sort of liability aspect. If you want to get into DeFi, if you want to be dealing with people's money, there must be some sort of safeguards. And again, I would reiterate, just because you put the DeFi label on it does not mean that you're not conducting financial services, and somehow you'll be held accountable.
And I think that is one of the biggest challenges with DeFi. And there was there was the IOSCO paper about a year ago that was targeting DeFi as well. And I think one of the biggest points on it was who do you hold accountable, and how do you hold them accountable? But I do think that for the vast majority of DeFi projects, it's not just a developer. And it's not just about disintermediating. Again, it's a business, right? So there's someone with a stake in it who's making money off of it somewhere. And so there's going to be a hunt to hold those people accountable when something goes wrong.
Yeah, and for me, that's not DeFi. I would say that that's not DeFi.
In theory, it's not. But then I think there is a spectrum, and there's a very big difference between theory and practice, right? Sure, it might be self-executing code, et cetera, but I think there are very few that fall into that pure DeFi bucket.
Yeah, I think it's kind of like mislabeling, but yeah, it's where we are today, and I'm sure it will continue to evolve.
We need you in the future events of One Incha. We promote DeFi. Joking. Gino.
I mean, the Tornado Cash was a very interesting case, and you can look at from both a legal and a compliance point of view. And from a pure legal point of view, you could say, well, authorities have certain rights, but also certain limitations by law, or basically by the idea what these authorities should be able to enforce. So this is, or they're stepping outside of their purview, right? And we all know what happened there. But on the other side, from a compliance point of view, I also see it as maybe a little bit wrong signaling into the market, that people can say, well, we just develop and I'm not responsible. And just to link back, it's about responsibility and accountability. And this is exactly CeFi, right? Because CeFi is regulated. you as a firm have a license, the firm acts through authorized personnel. If authorized personnel are non-compliant, there are consequences, right? And just because if you're using tech to do financial intermediation or do borrowing, lending, or whatever we do, which typically triggers license requirements in TradFi, it should not be seen as a way out to get rid of regulatory consequences, right? So therefore, I understand both sides of this Tornado Cash development, but we should also fully understand that if we put something into existence and it is used by bad actors, maybe we should think first, how can I mitigate that my very good idea with very solid use cases, which are perfectly legit, could be misused by illicit actors, and how that can be prevented?
That's well said. To clarify, I mean, I'm not defending actually the amount of money has been laundered, but I mean, Tornado Cash was a bit of political case against the government of North Korea, and the money has been laundered. But I believe, indeed, I think we collectively agree, even in the DeFi, if it's even pure decentralized world, as long the moment you are playing a role in a financial ecosystem, you have to have a certain bare minimum of market integrity and security measures. Like, for example, with 1inch, we started, I have mentioned it multiple times, we started self-regulating ourselves. We didn't wait for regulation to come. But users' protection is a matter. Security is a matter. Like auditing smart contracts, it's important. We even went further using TRM labs and God knows Hypernative, around 5 different detection system in place. We are able to detect bad actors' wallets. You know, it's possible. Anyone can monitor on chain. And we are able to blacklist certain wallets that we do not want to facilitate, even how decentralized our environment is. But we do not want a self-hosted wallet, which is associated to bad history, has access to our platform, right? So, but I think collectively we agree for DeFi, it needs its own maybe regulation. But what happened with Tornado Cash, they just attached a regulation, OFAC sanctions, which was applicable to financial institutions, entities, individuals, to a smart contract. And then we had dusting attacks, tinting of wallets of Brian Armstrong, CEO of Coinbase, getting polluted with Tornado, right? Just the same regulation didn't work, but the risk was there. So I want to almost close the panel and open for maybe 1-2 questions. Question from you. Self-custody or centralized? What would you go for? Why? Pros, cons? What do you think? Stefan, please.
I'm a self-custody guy. Not your keys, not your crypto, all the way back.
Love that. That's the spirit.
Yes, there's risk associated with it. You can lose your backup, as we all know, and it's not as convenient for trading. So there is a bit of education required. It's safer, centralized exchanges become a honeypot for hacking, etc. But ultimately, if you're not going to drive around with all your money in your car, right? So why have all your money on a centralized exchange? To give a bad analogy. So yeah, I think there's a place for self-custody. It empowers the user. You don't have to rely on a third party. So that sense of financial sovereignty is important and part of the ethos of DLT and crypto and Bitcoin from the beginning.
Maha.
I think I'll take a moderate position here. I have both. I kind of prefer centralized because I don't have to think about it too much. And a basic financial principle is diversification. I have my coins in decentralized and self-custody hosted wallets and centralized wallets. I just feel like we need a lot of work to make self-hosted wallets a bit more easier to deal with. And we have to find a better mechanism than phase words and private keys. I think it's really difficult, but we're in the very beginning, and the user experience has to still be improved.
Thank you.
So I think it's quite interesting, and I think it depends on the level of sophistication of the user, right? So if you're a retail user, then you're probably going to go for a hosted wallet. If you're slightly more sophisticated, maybe you go for Fireblocks, which is kind of a middle ground between self-custodied and otherwise. Now, there was, I don't know how many of you followed it, but there was the whole wrapped BTC debacle earlier this year with the announcement that BitGo was moving a bunch of the keys to BitGlobal, which is associated with Justin Sun in Hong Kong. And there was a lot of unease around why are we suddenly taking a registered custodian from the US and an inherently DeFi product and moving that to a jurisdiction that has no custody regulation. And so I think there's a lot of, I think it's a great question because when you do rely on a centralized wallet or a hosted wallet and you're depending on them to manage your keys, and then they suddenly change the rules of the game for who's holding the keys where, then
You don't have
red flag.
You don't have the sovereignty anymore. Right?
Exactly, it's uncomfortable. So I agree. We need better solutions in terms of the UX experience, but we also need for them to be safe.
Well, at the end of the day, it should be your decision as an investor or user, right? And as already mentioned, you should not put all your eggs into the same basket, and this basket can be custodial or non-custodial, right? So both can fail due to various reasons. And if you go to centralized exchanges, the regulatory framework and the legal situation, like what happens in case of a bankruptcy, that matters a lot, right? So you might want to do some due diligence and not just rely on a shiny front end to decide with which centralized exchange and you want to use as a custodian. But at the end of the day, if you save your private keys somewhere safe in your home and your home burns down, then it's also not the ideal situation, right? So at the end of the day, it depends on what is your preference, what is your level of technical know-how, but at the end of the day, not all eggs into the same basket.
Can I add just to that? I just feel like when it comes to custody, I feel like we have a lot of regulatory clarity there already, at least when we started in Germany. In Germany back then, one of the first things that was regulated was dealing with custody services and the way that was regulated. I feel with custody and self-hosted wallets and centralized wallets, we do have a very good ground, but I feel that the other use cases with DeFi would require much more attention.
100%. I mean, I have burned my fingers with custodian providers, so my money is blocked somewhere and they are not responding anymore. So that was one of the early times that I moved to self-hosted wallet, not your keys, not your money. But I also remember 2 years ago, CEO of Cooper was we were sitting in a panel in .0 Forum in actually Switzerland, and he made a okay, there's custodian, of course, providers. So he made a point, of course, if you, as a normal in mainstream society, if you lose your password, you know, like for normal users of our maybe parents or other, that they are not so tech savvy or familiar, yeah, you can always return to the exchange and recover, you know, they can help you. But in case of offline, even cold storages or your self-hosted wallet, yeah, if you forget your seeds, it's over. Your money is gone, right? So indeed, it's also a lot about user education and making it maybe even user-friendly, right? How to use it in terms of that you know exactly what you are doing. And I think they have a long way to. Yeah.
I agree totally, but if I link it to what we have today, if you lose your cash, the central bank isn't going to give you back the cash, right? So, I mean, you just have to, people need to take more responsibility.
No, so that's an interesting one as well, because central banks, or like, you get a lot of deposit insurance in most countries if you're holding in a bank, right?
But you're using an intermediary, the bank.
Correct, but that's the thing that we don't have at the moment in crypto is there's no such thing as any type of deposit insurance, whether you're dealing with a hosted or unhosted
The crypto
wallet.
firms can be insured, presumably.
It's very expensive.